Hello traders, today is Monday, August 26th, and this is the post-session review. Sorry I've been a little distant from the thread. I just caught some pretty bad food poisoning and feel like crap, but that's okay. We're here to continue on and maybe a little slower than I would want to, but we're here. Okay, so for the sake of transparency, we had a positive day today. Two trades, one winner, one loser, one winner. $240, $240 in the P&L, $240 here, um, and the balance 30, 85, 23, 30, 85, 23 down here, as you can see. And I want to show you something very special here, going back to the risk reward, risk reward, risk reward, and the point I've been trying to make consistently um, since we started trading this 5K challenge here. And it's not about the losers, it's not about the winners, it's all about the risk reward. So I want to go back before I show you what I want to show you. I just want to tell you that um, our goal is to grow an account. Our goal is not to get into drawdown, and our goal is not to make up the drawdown. The goal is always the same, to grow the account. Because if we focus on recovering from the drawdown, what happens? That brings in some emotional tendencies to want to what? Cut winners short, take profit early because we're in a recovery mode, so to speak, right? Well, that's the worst thing you can do. That's what really hurts your true recovery efforts. And if you go into your trading session understanding that all you need to do is just grow your account, that is your mission, that is your goal, that is your sole purpose when you trade is to grow an account, and you stay on the risk reward and you stay on the trade management, then what happens is not only do you recover quicker, but you keep growing your account. Okay, the recovery efforts, it's a byproduct of you wanting and trading to grow your account, not to recover your account, not to recover from a loss, not to recover from the last trade. Not that you're happy with the 60 points and that makes up the last trade and helps you in the recovery efforts. You didn't get into that trade for those 60 points or 20 points or 30 points that you feel like taking. That's not going to help you grow your account. It may help you put a little short-term bandage on a recovery effort, but you're cutting short the expectancy in your overall trade plan. Okay, you're cutting into that equity curve, and it's about the equity curve. It's about growing the account no matter what the balance is. If it goes down a little because you take some losses or you're in drawdown, the purpose is still the same, to grow the account. Even more so, you need to grow it quicker and stronger, right? The only way you're going to do that is by staying on top of the money management. The only way you're going to stay on top of that is by the risk reward component. And I'm going to show you um, what that looks like here in a minute, and the tremendous power that that offers, not only from a recovery standpoint, but from a growing an account as a whole. You saw our friend Brandon put some stats on there from the algo of the system, and by some optimization of the risk reward, the equity curve explodes, and that's the secret. So I thank him for putting that up on the thread, and and it empowers you and it should invigorate you to stay on the rule set, stay on the um, risk reward component of this trading. Stay on as much of that frequency as possible. And don't skip on the trade from an emotional standpoint, but take the trade when you have the signal, okay, that's in your trade plan. Not my trade plan, your trade plan. You have to trade your trade plan, not mine. Okay, now if your system is similar to mine, hopefully it'll provide you with a similar positive expectancy. I know what the system does. I've been trading it for years and I've made a life-changing income off of it. So when we get stuck in the mud like this, all we have to do is just keep executing. Stay on top of that risk reward, and the rest is irrelevant. The emotions are irrelevant. Everything's irrelevant. I understand. Easier said than done sometimes. I too am a victim sometimes of those emotions. But we have to do the best we can, and we have to what? Consistently follow the rules. Doesn't mean you're going to follow them every single time. Doesn't mean you're going to, be an ice cold trader like most of the time I am, but for the most part, you have to consistently follow your trade plan, and that's the secret sauce, along with the risk reward, along with the um, money management component. All these things is the secret sauce and the secret ingredients to what, the gold mine that we have in front of us here. Okay, so let me minimize this. Okay, let me minimize this for a second. As you can see that today, I mean this was yesterday, I'm sorry, Friday, we had a loser, 46 points, and then we had a winner, 112 points. Risk reward, right? This is not going to drive home just yet. Okay, today we had another loser and then a winner. The loser was 35 points, the winner was 84 points. Okay, but what does that mean? That today and yesterday we had pretty significant losers, right? 35 points is not a small loss. 40, 46 points is not a small loss either. It's an even bigger loss. But to be able to take on a loss, yes, Friday, a loss today, and two nice winners that offer risk reward, what does that do as a whole? Let's bring the spreadsheet back. Okay, and I see that these 2 days here, the 20th and the 21st day of our trading, and the next day we had a slightly break even day, slight losing day here. I think that was the live stream day, or the day after the live stream. I don't remember. The point is that when we add multiple losses here, okay, we see that we have here $687 of drawdown, right, on three back-to-back losing days, right? And then we also took on losses on this day and this day, but when we add the risk reward component, we had $567 on two trades. Okay, two trades not only erased the two losers that we had from Friday and today, but also did a significant impact in erasing the losers that we experienced on all of these three losing days combined as a whole. Two single trades achieved all that. Okay, what does that tell you about the overall expectancy? What does that tell you about the overall risk reward component, and how extremely powerful that is, not only to recover from drawdown, but to keep growing the account? What do you think is going to happen when we start stringing some of these winners back to back to back? What do you think that's going to do to the drawdown? What do you think that's going to do to the account? It's going to make it explode. Okay, and that is the point. Okay, that is the magic sauce. That is the takeaway that you guys need to wrap your heads around. It's not about the loss that you took, the 3 days, the fact that we've been struggling for 24 days, but why are we still here? Why are we recovering in that? Why are we slowly turning what looked like sure disaster around little by little and slowly but surely? With a couple of trades here and there that offer the risk reward that we're looking to capture from this system or any other system. Guys, if you can put the risk reward on your side, you don't have to trade at a 70% win rate. Okay? But if on top of that risk reward you can achieve, at times 70, 80% win rate, 60% win rate, and balance out somewhere near 70, oh my God, guys, do you understand what your account is going to look like in a very short period of time? You wouldn't even begin to comprehend what your account is going to look like. I know because I've done it. I know because I live it day in and day out. Okay? But I understand the challenges that you face with small accounts in markets like this. It is tough. But if you can maintain that trading state, you can maintain the discipline to deploy money management when needed, and on top of that, the discipline to trade your trade plan, then all of these things are just small challenges that you should be able to overcome. Okay? We've been trading for 24 days. We've been taking hits and hits and hits and hits and hits and hits, and we've had some pretty big losing days. But as you can see, the few winners that we have had, okay, have surpassed the losers by far. Okay, and giving us the opportunity to what? Keep competing, keep engaging, and keep fighting. Okay, that is the power of this system when things don't go as planned, and you can maintain yourself on the three components that you need to maintain yourself on, well then this, okay, is the component. And I'm so pleased and so glad that we fell into this situation, so you guys can understand the difference between someone that can let this turn into a disaster versus someone who understands the expectancy, understands the three components, understands that I can act in a consistent way more often than I don't. Okay, you know, emotions have been an issue here and there a little bit because that's the human factor in us, but understanding that you have to what? You have that choice of whether you're going to let that emotion dictate your course of action or versus you're going to suppress it because you understand the consequences of you succumbing to those emotions. That is the difference between a professional trader, someone who is in tune with the three elements and can apply them consistently, versus someone who lets the P&L, the numbers, and the little insignificant things spiral them out of control and into a blown account and never achieving their potential and their goals. Okay, so it is important to understand these three components. It's important to understand how we manage an account, okay, from all aspects. When we're winning, when we're losing, when we're stuck in the mud, whatever, it doesn't matter. It must be managed and handled at all times. This is how a professional does it, and this is why we can get into trouble and, you know, come out of it. Now, we haven't come out of it yet, okay, but the future is bright as long as we stay on these three elements, okay? I will say them again and I will say them 1,000 times. Trade plan, money management, trading state. The three components that make you the professional trader you are aspiring to become. Enough said. Let's get to the chart. Okay? Today we got to the, not today. Let's fast forward here. Okay, so today we came into the market and we had this huge freaking swing to deal with here, right? And I say this huge freaking swing to deal with because it had not qualified, right? When I come in here and I draw the ratio here, we know that the new structure high was made once price broke above this, and we know that from this, right? Okay, and then but we see that, you know, on this side, did we get anywhere near the 38% here? No. Okay, so we have to bring it, crap, we have to bring it up, and the 38% was reached here. Okay, so once price came down this way, okay, we had not made a new structure low. We've made a deeper than expected correction on this main swing. Okay, this is still 5 o'clock in the morning, so as price started coming back in, we see that the market had not opened yet. Price was up here, so we have a realignment of short-term order flow. We have a complex correction back up here, but we have alignment of shorter term order flow with the overall expectation, okay, which gave me the confidence and the interest to trade long, to look for longs. Okay, so I also knew, okay, that I was not going to put my stop anywhere down here. My account could not risk that situation. Okay, I could not justify, you know, a 152 point trade. My account can't afford it. So I'm like, okay, since I have realignment of the shorter term order flow with the what the market is working towards, I feel confident about putting my my stop below the shorter term main swing, which in itself is pretty big. Okay, show you what that swing looks like. This swing was 123 points. Okay, so that was a big enough swing on any account, even on the shorter term order flow. So why did I get long here? Well, not only is it the risk reward great, but there is a pattern here that there is a pattern here of an ABC, I'm sorry, and a Gartley pattern that completed here. Okay, I went slightly past its completion point, but only offered better risk reward, so I entered here. Okay, there was also an A, B, C, D pattern within here. Okay, so we had a Garley pattern complete in here, and I wanted to take the long here with the expectation of the new structure high, with the awesomest risk reward that we could expect from this order flow, and we have realignment. Now, I used the pattern for confluence. I did not trade the pattern, okay, which meant that the pattern did achieve um, a break-even point of here, but I was not trading that. My goal was to trade the expectation of the market making a new structure high above this and ultimately above this. That's what I was looking to capture. So if I would have gone to the break even of the pattern here and I was trading the pattern, I would have had a break even. I wouldn't have lost anything. However, that was not the goal. And by getting to the break even early, I was almost surely guaranteeing myself um, a break even trade. And I wanted to give that trade that expectancy of what I was trading. I used the pattern for confluence. I was not trading the pattern. Let's understand that, okay? But in this particular case, the pattern offered the risk reward and the pattern offered the proper stop placement, okay, that I needed to give it to give us an opportunity to play out here. Unfortunately, that did not happen. I got stopped out. And then a couple of you asked why I switched sides on the expectation. The expectation had not failed. And although the expectation of the market had not failed, and it was huge, but I was not. I can no longer. I could still not afford that risk. And as price came here, had a very shallow correction and good momentum projection to the downside. Okay, I felt pretty confident that the sellers were definitely in control, and that I wanted to get short. I also saw that the market had uh, achieved a one-to-one, and we had a nice rotation here to the downside. So I did have a D entry into an order flow that was developing. That was easier for me to work with from a risk standpoint on the intraday. Um, so I got short here, and my goal was to trade the one-to-one of the order flow that was developing. Okay, so once price completed that to the downside, got to the 127 and the one-to-one, I started trailing on the rules and took the 84 points as price came back out to take me out. So I had a really great entry, only suffered a little bit of pain there, and took most of the overall swing here, giving me an opportunity to capitalize on that, make up the loss, and add um, some positive cash flow into the day. So those were the trades that I took today. Those are the reasons why I took those trades, and I hope it answers your question as to why I took short here. Okay, we had order flow that was developing to the downside. Okay, now overall the expectation did not fail. Okay, and the market started climbing higher. And once this high was taken out, we had what? Realignment of the order flows, right? Realignment of the short term and the long term, and this expectation is still in play. Okay, so how would you be able to capitalize from? I did not take this trade because I was in a teaching mode with someone that I was on the call with my group, and we're saying, okay, so how do you re-qualify? How do you re-enter? How do you qualify short-term patterns to use them for confluence without trading the pattern? And we identified this ahead of time, and as price came down here, um, and sure enough rotated, then we saw how we could have positioned ourselves for the long here. The issue was the stop placement, you know. Um, but that's a lesson for another day. But it gave you an insight as to what the market was ultimately working for. Did the expectation ever fail? No. That was down here. That got tested. Did the expectation play out? Okay, and it hasn't played out yet. But what is the market still trying to accomplish? Okay, that new structure high overall. All right. So very pleased with the way the day went. Very pleased with the trades that I took. Very pleased to identify areas like this ahead of time. It only adds strength and value to your analysis process, to your confidence, to your understanding of strength and weakness and where exhaustion or short-term exhaustion could set in, so that you can then position yourself to capitalize off of what the market is working towards. That is how we use complex corrections and complex short-term order flow to help us understand where that confluence is going to come in to help you align yourself with a great trade. Okay, so I also didn't take this trade because of the timing, but I wasn't going to take the trade regardless, just because I was in a teaching mode versus a actively still looking for trades. All right, so thank you very much for the time. Thank you for the opportunity, and thanks again to Brandon for the valuable algo stats. Very impressive. It only reassured me what I already knew, and hopefully gave you guys some confidence in what you guys are trying to do. And the process of applying yourself just means that some of us have to work harder than others, but by separating those emotions, you can then capture as much of that equity curve as possible. All right. Well, thank you very much, guys, and I'll talk to you again tomorrow, and I'll see you on the live stream on Wednesday. Very excited. Thank you.